The reason why you should is basically because in the risk transfer and risk management process, there's a specific procedure we go through, and it starts with avoidance. If something is too big, avoid it. If you can't avoid it, then what you want to do is you want to manage the risk. That is, you want to take it on, but help to prevent any losses. If you can't avoid or prevent, then you want to reduce the severity of the losses. If you can't do that, you want to segregate the losses. And what we mean by that is split them up so that no one location has severe losses. That's especially the case with property coverages. We usually talk liability. That's especially the case with property. And the final step, and this is the important one that we talk about with what we do, is if you can't avoid, prevent, reduce, or segregate, those classic examples of risk management, the final step is give it to somebody else. And that means get someone else in the contract to agree to take on the risk. That's number one, clear, unambiguous requirements. And then number two, to answer directly your question, I know it's a little ways getting there, but to answer your question directly, the reason why you want to verify is because, quite frankly, my experience from my 45 years in my own firm and 50 years in this industry is that most contractors simply sign contracts and know very little about what's in them, much less what's required of them and their insurance. So they may not have the right coverage. And therefore, the reason why we need to verify their coverage is to be sure it's going to be there at claim time. And many times with many of my clients, what we find that we end up doing is we end up saying, well, this insurance is unacceptable because the system has flagged it, and we know that there's these issues with it. It's not the right limits. It doesn't have the correct insurance. It's not for the correct types of coverages. There's some limitations or exclusions, or we can go on and on and on with all these different things. But for some reason, it doesn't have the right insurance. So we go to them and say it's not acceptable for these reasons. And of course, the beauty of our system is that it does that automatically. It automatically sends back out and says, these are the things that do not comply. Please bring them into compliance. And it's very specific about what it is. Now, when that happens, what happens as a result of that is we're doing them a favor as well as ourselves, because their insurance that we're depending on is no good to us if it's not going to pay come claim time. And without verification, I can tell you that not just some, my experience has been the overwhelming majority, and I'm talking in excess of 70, 80% of third parties, even if they have policies, the policies are somehow incorrect or will not pay at claim time. And that's why we need to verify, because we want to do that final step of the risk management process, which is to transfer the risk to someone else. But that's not done simply in the contract. That's only step one. Step two is verifying that they do in fact have the coverage for it. Otherwise, what happens is we see a policy, it says general liability. We go, oh, they're covered. And guess what? They're not. And therefore, the claim comes back on us. So that verification is a little bit of money very well spent to essentially get free coverage for us because we've got the coverage from the third parties insurance companies.